Buy your first home with as little as zero deposit.
In this video, we're going to discuss what deposits needed for a mortgage application. When it comes to buying your first home, there are a number of different schemes available, and all of those schemes all potentially require different deposits. In this video, what we're going to look at is we're going to look at all of those different schemes available to you and what that means and what type of deposit that you're going to need for that type of application.
So the first scheme is shared ownership. Now, with shared ownership, essentially, it's you're buying a percentage of the property and the other percentage that you're not buying, you are renting from the housing association. So for the percentage share that you are buying in the property, the good news is you can potentially get away with not putting down a deposit whatsoever. So yes, that means 100% mortgage. Very few lenders will lend 100% of the value of the share. So you are going to be restricted in regards to lenders, meaning that you could be paying a higher rate of interest. Typically speaking, lenders will normally require you to put down a 5% deposit when it comes to a shared ownership mortgage.
The next scheme that's available for buyers is the Right to Buy scheme. The Right to Buy scheme is available for anybody that currently lives within a council house. Now, once you've lived within that house for a set period of time, normally 3 years, you do then get a discount applied to that property. And what you can do is you can use that discount that the council provides you to act as your deposit. So if you are looking on the Right to Buy scheme, you don't actually need to have a deposit yourself to put down on the house. Therefore, you're lending 100% of that discounted price. The next scheme that's potentially available to you is the equity loan scheme. Now, historically, the equity loan scheme was known as Help to Buy. And what effectively that is where you get a loan to help with your deposit through a second charge. Going forward, there will be equity loan schemes available for people to take as a mortgage. Dependent on that scheme will depend on what the setup of that looks like. So with some schemes, when you take that loan, you have to pay that loan back on a monthly basis, which can increase your monthly outgoings when you add that to your mortgage. The second way that some of those scheme providers allow you to do it is by not paying back a monthly repayment, but just servicing the interest for the loan. So for example, if that equity loan scheme provides you with an additional 10% deposit, when you come to sell the property, they will then take 10% of the new value of that property. So you may have bought a property for, let's say, 150,000 and the equity loan scheme was 10%, which is a £15,000 loan. It may be when you come to sell the property that the property value at that point is valued at £200,000 and therefore 10% of that value is £20,000. So you may end up having to pay more than what you originally borrowed. We have helped a number of clients with the equity loan scheme, and what that's allowed the clients to do is buy homes that they thought were never achievable based on their standard deposit. By adding the equity loan scheme to your deposit may be the difference of buying that dream home. So in summary, it is very possible to get a mortgage dependent on the type of scheme that you're looking at based on having a zero deposit. Even if you've got a small deposit, don't give up. There are potentially plenty of lender options that are out there for you.
It's important that you speak to a broker so the broker can review all the options that you have. The bank that you're currently with may not be participating in them schemes, so you want to make sure that you're getting the right advice before you go and pursue that property. So if you're interested in buying a property through the shared ownership scheme, please check out our other video.